Hey, this is Jack from Alphacharts with a state of the market video. Today is May 18th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. Now, I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you for watching this video. Please like and subscribe to that YouTube channel. And you can find me on X at Alphacharts365. I'm posting things all the time, mostly market related, but sometimes not, right? I do have a subscriber group, which is completely market related. I give an immense amount of information for only $10. And the reason why I do that is because not everyone consumes information in the same way. Some people like it written, some people like videos, some people like just scans or idea generation, some people like long videos, some people like short videos. So I basically give it all and let people pick and choose how they want to consume it. My guess would be most people don't consume all of it because there's a lot going on here, but they probably pick and choose what they like. Because some people just want idea generation, and so the focusless video is perfect for them. And the weekly scans that I post, I'm sorry, daily scans that I post, that's they probably eat that up. They probably love that, right? Some people like the long format market notes I make on Sundays and on Thursdays, right? And so they can read that pretty quickly. I have charts in there, annotated charts, and to explain what I'm talking about, and that's great. Some people like the videos that I'm making, right? So I do a long format video on Sunday just for them. I also do a midweek video on Tuesdays just for them, and so some people I'm sure watch that. And I'm sure some people read and watch it all, right? But that's the beauty of it. Depending on your time and how much you want to put into it, for only $10 a month, you get so much information that you get to pick and choose how you want to do it and what really resonates with you. So it's really a great deal. Give it a try. Click on Alphacharts 365 on X and then subscribe. It's month to month as well. So, the one of the beauties of it is that if you're working full time and just can't put that much time into it, researching the market, this is basically the Cliff Notes or the short version of the way I see the markets. And it's a great way just to also see if what you're seeing jives with or goes along with what I'm saying. It gives just extra confidence in the market as well. Is this going to automatically overnight make you an amazing trader? Nothing's going to do that except for time in the market and trading. Can this shorten your learning curve? Yeah, I think this can absolutely shorten the learning curve and get you to that point at a faster rate. All right, so check it out. Let's get into these charts. SPY. So we had a beautiful move higher right there, 1.24%, and then just a couple consolidation days. Nothing that I'm overly worried about. Moving averages were extended, starting to just catch up. I think as long as we have this 424, 425 area holding, I think that everything's just fine. I think we're in a nice little trend. I know a power trend is going to start Monday after Monday if everything holds on tight and we don't get any kind of weird move lower, which doesn't look that way. And so I think we're in a nice trending market. On the week, the SPY was up 1.65%. RSP was up 1.19%. Again, both very respectable numbers. RSP is the equal weighted S&P 500. And again, we're back up to the whoopsie period. Now, can we find some selling up here? Yeah, it's possible, right? That's where we found selling before. But overall, I think that we're in a very nice trending market. And right now, I think dips are buyable at this point. Qs, same idea. We had a nice strong breakout right there on, I think it was Wednesday. And then just a little, kind of lower volume compared to the breakout day, right? Lower volume, not much, kind of sideways digestion, letting these moving averages catch up. I think that's a healthy look to the market. The week was up 2.2%, very strong. And equal weights were up 1.89. Again, equal weights have not broken out yet, but that's kind of true across the board. It's fine. Can we find, when it hits $90 again, can we find some selling pressure in there? Yeah, absolutely. It's possible. But I think that, we're likely to move higher. That's that. Mid caps. Let's go for the week first because it's going to be easier. 0.82 for the week, so a little on the underperformance. But overall, let me see. And going to daily, we can see how um I'm not sure why it's so small right there. But this this area right there, it busts out this general area and it's just moving higher. Now it did get basically up to this prior point. So I think the mid caps are actually leading a little bit here because it got back up to prior highs and then has a 2 or 3 day pullback. And it kind of looks cup and handle-esque, letting the moving averages catch up. We'll see if that continues or not. But overall, again, just a very healthy look to it. It does need to break out, right? 560-ish or above for the next move higher to happen. But overall, yeah, they're doing just fine. I think maybe leading by a few days, the indexes. And you have IWM looking very, very similar. Maybe an inverse head and shoulder. This shoulder may be very truncated. It doesn't have to be this pronounced. Maybe a cup and handle, right? It's kind of deep cup. Whatever you want to call this, it's a base, right? That's the more important idea here. It's a base. And I think that if it, gets above 211, 212, something like that, I think that this is going higher, right? And probably going to this 230-ish area. So the indexes overall are they're doing just fine. They look pretty good over, again, depending on your time frame, right? I'm a swing trader, so I'm always doing things from a swing trade. I'm talking from a swing trader's time frame. Um, let's look at XLF. XLF already to all-time highs, one of the leaders in the market. SMH, um, didn't quite get back to all-time highs, but again, has that kind of basey look to it. Um, Lower volume on this pullback, which is absolutely fine after a couple strong days. And so yeah, everything looks good. Next week we have Nvidia earnings. This will obviously influence the SMH quite a bit. On the week, by the way, I forgot to do weekly on XLF. XLF was up 1.43. SMH was up 3.09. Again, super strong week. Equal weighted semiconductors were up 3.96, even stronger than the SMH, which is great to see. Again, let me just do this. And actually, I want to see one thing here. Yeah, I'm on log scale. Um, All right. And then you have semiconductor. You're right. This is the equal weight semiconductors, actually almost right back at all-time highs as well. Again, very nice to see. That gives me a lot of confidence going into next week's Nvidia's earnings because we're not seeing any kind of problems in semiconductor land. So if you want, where is the worry in the market, right? So everything's been great up to this point. We've been right on it. Transports aren't confirming, right? And we'd like to see transports confirm, and they're just not doing that. So if you want something to worry about, that's something to worry about, right? There's always gonna be something. I'd like to see this get above the 50-day, of course, and at least participate in this market, and we're not getting that yet. Now the equal weights are also underneath the 50-day, still declining. So again, they both have issues with them on the equal weighted and the let's go on the weekly. Equal weights were down on the week. Cap weighteds were down on the week. Again, it shows a little bit, of a different story on the transports. Again, is that a deal breaker in this market? I don't think so, but it does show some issues, right? Not everything is perfect. Going to housing, that was up 0.15 and that was down 0.31. Let's go to the dailies on both of them. So, XHB, right? Come on, XHB. Again, it's not breaking down, but it's not really participating right now either, as well as ITB, right? So they both, again, not as bad as transports, but this is the section, right? Transports and housing. Man, again, housing may be issues for jobs in the future. Transport, it may be saying 3 to 6 months down the road, maybe we do hit that recession that we've been talking about for the last 3 years. I don't know, but right now in the markets from the other parts of this, my opinion, is is that we're in a bullish time. How long does this last? I don't know. Let's look at the internals and see if they talk about that as well. We have a very low VIX under 12 at this point, right? Right at 12, basically. Very, very low. Um, we haven't been this low since, before COVID. So that's pretty significant, right? And we could be lower. We've been there. So again, I think it's a bullish time. Yes, we're going to get some snapbacks and some shakeouts along the way, but overall, that looks pretty good. Credit spreads, again, reasonably tight, looking pretty good. Breath, improving, looking fine, right? We had our shakeout here. This was good enough for me. We talked about that way back when. Uh, oh, we added this other thing in there. Let's do this. Yeah, put call ratio, which is more of a sentiment indicator. Leaning on the bullish side. I think that's a positive, right? We're not extreme, but we're leaning bullish. That's a good thing. So the dollar. The dollar, we were expecting it to break higher from here, and it reversed and broke lower. So far, that's a positive, right? We're below this, you know, 104, 50, 75, somewhere around here, this green boxy area. I think that's a positive. So that is looking good as well. And the 10-year yield. 10-year yield got down to this 4.3, prior highs back here, kind of resistance here, kind of resistance here. So the yield, it looks like, it bounced where it was kind of expected to. Now, if it rolls over here, that would be extremely, extremely bullish. Also, that could also be the bond market pricing in, rate cuts later this year. Again, I don't think there's going to be any rate cuts till December after the election. It just doesn't make sense to me for that to happen before. But that's a different conversation. And again, the market is, I think, telling us that as well. And yeah, so I think overall, let's go back to SPY and wrap this up. Things are, I think, in a viable range. Yes, there's always going to be a concern here or there, and there's always going to be, chance for a shakeout or doubt to be put in our minds. But we're in an area that I think that we can be buying, looking for things to buy versus looking to things to sell, right? If you like this kind of market analysis plus so much more, check out my subscriber group. It's super easy to get involved in this, and I think that the amount of information you're going to be getting, and it's going to really, really, be beneficial to you. So, again, hope you all are having a great day, and good luck this week.